Third quarter figures released on Monday show soaring inflation and a weaker lira have left their mark on GDP growth. But as Christine Pirivalakis reports, the government in Turkey says it's already put the right measures in place to boost the economy.
Turkish consumers have hit the brakes on spending. A lira sell-off this year has driven up the costs of food and fuel. In October, that sent annual inflation to a record high. And that's dampened economic growth in the third quarter to its slowest rate in 2 years.
Turkey has continued its trend of strong growth in 2018. In the third quarter of the year, domestic demand lost momentum. But we have minimized the negative effects of that with the measures we've taken.
The economy expanded 1.6% annually from July to September. That's compared to a 5.3% in the second quarter and a 7.2% jump in the first quarter this year. One key factor is household consumption, which accounts for about 2/3 of the economy and only grew at a rate of 1.1%. And that's mainly due to a weaker lira. The currency lost nearly 1/3 of its value against the dollar this year, but has rebounded from record lows in August. But the weaker currency has also had its beneficiaries, Turkish exports. Exports of goods and services were up 13.6% in the third quarter, while imports fell 16.7% from the same period last year. To curb soaring inflation and counter the currency's depreciation, the central bank has raised interest rates several times this year, with its benchmark lending rate at 24%. In September, Ankara also launched an economic stimulus program. The government lowered taxes on some commodities to stabilize prices and started anti-inflation discount campaigns to revive the economy. These measures are starting to pay off, with inflation dropping by 1.5% last month to 21.6%. Finance Minister Berat Albayrak says austerity will be at the core of next year's budget to drive growth.
With tight monetary and fiscal measures, we will follow a sustainable growth policy regarding current accounts. We expect a growth rate of 3.8% for 2018 and 2.8% in 2019.
On Monday, the central bank lowered its forecast for the lira-to-dollar exchange for the end of the year by 3.5% to 5.4%. It expects inflation to drop as well. A glimmer of hope not only for investors, but also Turkish consumers who say they hope the stimulus measures will soon have a positive effect. Christine Pirivalakis, TRT World.
Necmettin Kaymaz is from the Turkish Investment Office and is the Chief Project Director, and he joins us now. Welcome, good to see you. These are the worst quarter figures since the attempted coup in 2016. It makes for pretty grim reading, doesn't it? Any surprises?
I don't think they're the worst because we had, this was actually expected, when the new economy program was announced a couple of months ago, and everybody was saying it is a realistic program, and actually that's what's happening. Economy is rebalancing, and that's what the markets were expecting. And I don't think we are seeing any surprise here. And Turkey has also, if we look at such short-term moments in Turkish economic history, we will see Turkey has proven to be a resilient economy and also a fast recovering economy after short-term contractions or any slowdown. And that's what we are seeing actually right now.
I mean, this is a snapshot, but when you look back over the year, Turkey's been battered by a lira sell-off. It's driven up the costs of food and fuel. It's forced the central bank to hike its main rate to 24%. Is this the end of the roller coaster? Is this the bottom? Are things going to improve from here on in, do you sense?
If we look at the leading indicators, we will see, for example, inflation has already started to slow down, and it's actually right now approaching to what has been targeted or expected in the new economy program. And also, if we look at the other leading indicators for the beginning of the fourth quarter, for example, export has been booming in October. It has increased by 13%. I think those are the good indicators that the Turkish economy is recovering fast.
What are the fixes in Turkey's gift to try and turn this around? Or is that too simplistic, that the global economy, the global headwinds make it difficult to pull local, national levers for fixes?
Yeah, I mean, there are, of course, national factors, and our policymakers are constantly following domestic and global conditions and taking necessary measures according to those developments. That's what we are seeing in the new economy program. But on the other hand, we have global economic developments which are out of our control. Now, you have been already talking about that. For example, trade war, they're all creating uncertainties. The question of Italy in Eurozone, and again, Brexit uncertainty, you know, today it has already been called off by Prime Minister, and they're all creating uncertainties for global economy. And then we have Fed hikes expected, you know, and they're all creating uncertainties in the global economy. And of course, they will have some repercussions on national economies.
When you pick these figures apart, one of the big issues here at the heart of the story is the performance of the construction sector, long a beneficiary, of course, of Turkey's credit-fueled building boom. It contracted 5.3% year on year. That needs to be somehow turned around and fixed, doesn't it?
But again, you know, I mean, if you were talking to me last year, you know, you would hear economists complaining about Turkish economy is always growing on a construction. What is contracting? They say, no, we have to fix construction. So I think it's rebalancing. Now, how about exports? You know, it has significantly contributed to the growth in the third quarter, and it's continuing to grow in the next couple of years.
Good to see you. Thanks for coming in.
Thank you.